Welcome to the deep dive. So think about it for a sec. All those flavors you use every day. You know, the cinnamon in your coffee, maybe, or the stuff you sprinkle on dinner. Flavors are just, well, they're everywhere. But have you ever really stopped to think about who's behind those tastes? Like the big companies? Well, today, that's exactly what we're digging into.
Yeah, exactly. Our mission today is to really unpack the latest financials from McCormick and Company. You know them, right? Global leader in flavor. We're focusing on their latest SEC filing. That's the Form 8K they just put out.
The 8K, right? That's the one for, like,
With
major updates.
precisely major events, and we've got the press release that went with it too. So we're looking at both.
And this isn't just, about staring at spreadsheets. It's trying to figure out how a huge company like this handles, well, everything going on in the world economy right now.
Right, and the timing is perfect. This report was filed June 26, 2025. It covers their second quarter results, which ended May 31st.
So super fresh data, a real snapshot.
Exactly. And to really get these numbers, you kind of have to appreciate just how big McCormick is. You said a global leader. We're talking over $6.7 billion in annual sales.
Wow.
Yeah, and operating in 150 countries and territories.
That's a massive footprint. So what's their main business? Is it just the spices we see in the store?
No, it's much broader than that.
Yeah.
They manufacture, they market, they distribute spices, yes, but also herbs, seasonings, condiments, various flavors.
Okay.
And the key thing is who they sell to. It's the entire food and beverage industry.
The entire industry. So not just me buying paprika.
Right. Retailers, yes, that's where you buy your McCormick spices.
Yeah.
But also other big food manufacturers. Think about the seasonings in processed foods or snacks.
Okay. Ingredients for other companies.
Exactly. And also food service businesses, restaurants, caterers, that kind of thing.
So, okay, when you reach for that bottle of French's mustard or Frank's Red Hot, or maybe Oldie Bay, Laurie's, Cholula, those are all McCormick brands.
That's right. Stubbs barbecue sauce, too. It shows how much they're part of our, everyday eating.
It really does. And you mentioned they sell to consumers and to businesses. How does that work structurally?
They have two main operating segments. First is the consumer segment. Yeah, that's pretty straightforward, the stuff you buy in the grocery store.
Got it. The retail side.
Then there's the flavor solutions segment. That's the business-to-business side, supplying ingredients and, well, flavor solutions to other food companies and food service operators.
Okay, flavor solutions. Supplying the secret sauce, maybe literally sometimes. How do those two segments interact? Does it give them an edge?
Oh, absolutely. It creates this powerful synergy, what they learn from the massive consumer market. That feeds into their flavor solution side, helps them innovate for their business customers.
Okay, so consumer trends inform the B2B side.
Yeah, and it works the other way, too. Working with big food manufacturers gives them early signals on emerging trends, new flavor profiles.
Which they can then bring back to the consumer side.
Exactly. It's a really effective feedback loop for growth. And they've been doing this a long time. Founded back in 1889.
Wow, 1889, that's some serious history. Based in Maryland, right?
Hunt Valley, Maryland, yeah. Long-standing presence.
All right, let's dig into those Q2 2025 numbers then. What's the headline on sales?
Okay, so for the second quarter, net sales were up 1%.
Yeah.
Now, you do have to factor in currency fluctuations. They had a 1% unfavorable impact there.
Right, currency always complicates things.
It does. But if you look at organic sales growth, which strips out that currency effect, that was 2%.
Okay, 2% organic. And what drove that? Price increases or selling more stuff?
Primarily driven by volume. So yes, they were selling more actual products.
Selling more product, good sign. How did that flow through to operating income?
Well, reported operating income was $246 million. That's up from $234 million last year.
Yep.
But then you look at what they call adjusted operating income. That came in at $259 million. And that's up nearly 10% compared to the same quarter last year.
Almost 10% adjusted. Okay, you mentioned adjusted income. We see this a lot in earnings reports. Can you quickly explain again why companies use these non-GAAP or adjusted figures? What's McCormick stripping out here?
Sure. It's a good question. So non-GAAP measures like adjusted operating income or organic sales are meant to supplement the standard results, the GAAP results, generally accepted accounting principles. For McCormick, adjusted usually means they're excluding certain costs they call special charges.
Special charges, like what?
Things related to restructuring, maybe actions to cut costs, make things more efficient, sometimes costs related to acquisitions, integrating a new business, that sort of thing. The idea, according to the company, is that taking these out gives you, the investor or analyst, a clearer view of the core ongoing business performance. Makes it easier to compare periods and see the underlying trends.
Got it. So it's about isolating the regular operational performance. Makes sense. What about earnings per share, EPS?
Okay, reported EPS was 65 cents. That was actually down slightly from 68 cents last year.
Hmm.
But the adjusted EPS held steady. It was $0.69, basically comparable to last year's adjusted figure.
So again, the adjusted number looks pretty stable, suggesting the core is performing well despite maybe some one-off items impacting the reported number.
Exactly. That seems to be the picture.
And what did the CEO, Brendan Foley, have to say about all this? Was he happy?
Yeah, his comments were pretty positive. He mentioned strong results for the first half of the year and talked about successfully managing in a dynamic environment.
Hmm.
He really emphasized their continued volume-driven performance and share gains, pointing to their investments paying off.
Okay, volume and share gains.
And interestingly, he also mentioned things like elevating our power of people culture and building the next generation of leaders.
Huh. Interesting to see that called out in a financial release. Okay, so that's the big picture. Let's break it down by those two segments now. How did the consumer segment do? The stuff we buy.
Consumer was strong, net sales up 3%, hitting $931 million. Organic sales also up 3%, again, driven by volume and product mix.
Solid growth there. How about different regions?
Pretty good across the board, actually. In the Americas, organic growth was 2.8%. In EMA, that's Europe, Middle East, Africa, it was 3.3% organic. And Asia Pacific, 3.7% organic growth.
Wow, so pretty consistent strength in retail globally.
Yeah, the consumer side looks quite healthy.
But you hinted earlier the flavor solutions side, the B2B segment, was maybe a bit different. What was the story there?
Right, it was, let's say, a more nuanced picture. Net sales actually decreased 1% to $729 million. Organic sales were flat, basically no growth year over year on an organic basis.
Flat. Why? I thought the consumer side volume was up.
Well, in flavor solutions, they did get a 1% benefit from pricing, but that was completely offset by a 1% decrease in volume and mix.
Ah, so volume is down in that segment. Any particular areas?
Yeah, the report specifically calls out the EMEA region for flavor solutions. Right. Organic sales there were down 7.0%.
Oof, 7% down in EMEA's flavor solutions. That's pretty significant. What might be behind that?
It could be a few things. Maybe a slowdown in restaurant demand in Europe, or perhaps food manufacturers there are cutting back slightly due to economic pressures. It definitely highlights different dynamics compared to the consumer side.
Yeah, it really shows how those segments can behave differently. Okay, let's shift to profitability. Gross profit margin, did that improve?
Gross profit itself was up slightly
Okay.
by about $3 million, but the gross profit margin as a percentage of sales actually went down a little. It contracted by 20 basis points.
20 basis points. So 0.2% down to what level?
Down to 37.5%.
Okay. Why the contraction in margin? Higher costs.
Exactly. The report cites increased costs to support building future growth capacity, so investments and also higher commodity costs.
Commodity costs, always a factor in the food business. How are they fighting that pressure?
This is where their big internal program comes in.
Yeah.
The Comprehensive Continuous Improvement Program, or CCI.
CCI.
They specifically mentioned that significant cost savings from the CCI program partially offset those cost pressures. So it's clearly a major lever for them to pull.
Okay, so CCI is helping cushion the blow from higher costs.
Yeah.
What about that adjusted operating income again? You said it was up almost 10% overall. What drove that increase if gross margin was slightly down?
Good question. The big driver was lower SG&A expenses, selling, general, and administrative costs.
Lower overheads, basically. Why were those down?
A couple of reasons mentioned. One was timing. Apparently, some stock-based compensation expenses shifted from Q2 into Q1 this year, so that made Q2 look lower. But also, importantly, more cost savings from that CCI program, specifically streamlining initiatives that cut SG&A.
So CCI is hitting both cost of goods and SG&A. Impressive.
It seems to be. Now, they did note that the lower gross margin partially offset those SG&A savings, and they also continue to invest in brand marketing and technology, so they're still spending strategically.
Right, balancing cost cuts with necessary investments. Did both segments contribute to that adjusted operating income growth?
Yes, they did. Both Consumer and Flavor Solutions saw their adjusted operating income increase by 10% as reported.
Okay.
And Flavor Solutions was actually even stronger on a constant currency basis, up 13%, driven by those lower SG&A costs, product mix, and some pricing benefits.
Interesting. Okay, now for the elephant in the room, tariffs. Huge topic for any global company. How are they impacting McCormick and what's baked into their outlook for the rest of the year?
Yeah, definitely a major factor. First off, they reaffirmed their full-year outlook for 2025, which is notable given what they call the current uncertainty of the consumer and macro environment.
Reaffirmed despite uncertainty. Okay. What tariffs are they actually dealing with?
It sounds pretty significant. They mentioned a 10% tariff on all U.S. imported goods.
Yeah.
Then an additional 30% tariff specifically on goods coming into the U.S. from China.
Wow. 30% extra from China on top of the 10% base.
That's how it reads.
Yeah.
Plus reciprocal tariffs from other countries hitting them. They do mention they're compliant with the USMCA trade agreement for Mexico and Canada imports, which presumably helps there.
That sounds like a really complex and costly tariff landscape. How on earth do they plan to offset that?
They listed several strategies. Optimize sourcing plans using analytics to figure out the best places to get materials from. Continued cost savings, again, mentioning that CCI program.
CCI to the rescue again.
Seems like it. And also what they call strategic revenue growth management, which likely includes careful pricing actions.
Okay, so a multi-pronged approach. Is their outlook fully accounting for all potential tariff trouble?
Here's the key caveat. They state very clearly that their outlook is based only on the tariffs that are currently in place.
Only current tariffs.
Yes, it specifically does not factor in any potential new tariffs or trade actions that might happen later in 2025.
Okay, that's a really important disclaimer. So based on current conditions, what are they projecting for the full fiscal year?
For net sales, they expect growth between 0% and 2% as reported. On a constant currency or organic basis, that's 1% to 3% growth.
Okay, driven by volume.
Yes, mainly volume-driven, and they also expect a gradual improvement in the consumer market in China to contribute.
And profit growth. Adjusted operating income and EPS?
Adjusted operating income growth is projected at 3% to 5% as reported, or 4% to 6% in constant currency. And adjusted EPS growth is forecast at 3% to 5% as reported, or 5% to 7% in constant currency.
So still projecting decent growth on the adjusted figures, even with the tariff headwinds they know about. Are there any other potential drags on that EPS growth they mentioned?
Yes, a couple of things that will partially offset the growth. One is a higher expected tax rate for the year. They're guiding to 23% compared to 20.5% last year.
Higher taxes. Okay. What else?
They also expect income from their unconsolidated operations to be down by a high single-digit percentage year over year.
Unconsolidated operations, like joint ventures.
Exactly. In this case, it's mainly due to the U.S. dollar strengthening against the Mexican peso, which impacts the value of earnings from their operations in Mexico, like McCormick de Mexico. They do note, though, that the underlying performance of McCormick de Mexico remains strong. It's more of a currency translation issue.
Got it. Currency strikes again. And finally, what about cash flow and returning value to shareholders?
They expect strong cash flow for the year, driven by profits and also by initiatives to manage working capital effectively. And they anticipate returning a significant portion of that cash to shareholders through dividends.
Okay, dividends remain a priority. This has been really insightful, digging into the details. If you had to boil it down, what are the main takeaways from this McCormick report?
I'd say first, McCormick is showing real resilience. They're maintaining performance, even growing organically, in what's clearly a tough global environment. Second, their two-segment strategy, consumer and flavor solutions, seems to be working, though they face different challenges in each. Third, tariffs are a major issue, but they have proactive plans, and that CCI program is absolutely crucial for offsetting costs and driving efficiency. It's mentioned repeatedly.
That CCI program definitely sounds like their MVP right now. So why should you, our listener, care about all this? What's the so what?
Well, it really connects the dots, doesn't it? You see how big global issues like trade policy, currency swings, commodity prices directly impact a company that makes products you probably use every single day. It makes those abstract economic forces feel much more real, seeing how they play out in your spice rack or your favorite hot sauce.
Absolutely. Okay, one final thought to leave everyone with. The CEO, Foley, specifically mentioned investing in their people culture and building future leaders right alongside the financial talk. What is that emphasis on, the human element? Tell us about what it takes for a giant company like McCormick to succeed today, especially in an industry so tied to changing tastes and complex global supply chains.
That's a great question to ponder. It suggests that maybe beyond the numbers and the efficiencies, investing in people, culture, and leadership is becoming recognized as just as critical for long-term success in this kind of dynamic world. Something to think about.